Stocks trimming their losses late in afternoon trading after the Federal Reserve outlines further steps to try and stimulate the economy. Courtney Donohoe has the latest from the New York Stock Exchange. Courtney.
Well, Pimm stocks finishing lower, paring some of those losses after the Fed said it would take some steps to give a little bit of a kickstart to the slowing economy. The Dow is down more than 100 points on disappointing economic news earlier, but came back after that Fed announcement. The Fed saying it will use money from investments and mortgages to buy long-term govies, keeping more cash in the economy. Fed also saying that it would keep the benchmark rate close to zero for an extended period. Now, the statement from the Fed, a little darker on the economic picture than the June report. Quote, the pace of economic recovery likely to be more modest in the near term than anticipated. We've had a lot of disappointing economic data recently that spooked investors. Ben Bernanke said a few weeks ago that the recovery's pace is unusually uncertain, signaling to some investors the Fed may take some action at this meeting to boost the economy.
Now, Courtney, you mentioned some economic reports that investors perhaps are concerned. Give us some of the details on how that happened.
Well, reports in the U.S. and also in China worrying investors. First, we're going to start with China. That country said the pace of property price gains and import growth slowed. Lots of investors hoping China will keep us going as growth slowing down here in the U.S. And now coming back to the U.S., worker productivity declined more than expected and labor costs moved slightly higher. And if they're avoiding hiring and current staff has reached maximum output, there may be little room for earnings growth. And wholesale inventories coming in less than expected, another sign that the economy is slowing, and falling inventory shows companies are just not buying as many products to stock shelves because people, they're just holding on to their cash right now.
Now, Courtney, Disney's earnings, they were reported after the bell. What are we talking about? 67 cents a share. Wall Street was looking for 59 cents.
Yeah, and we're seeing a bump in earnings because of Toy Story 3 and a rebound in advertising. 67 cents a share, better than expected, as you said. Disney's TV networks are asking for higher prices for ads. The company's Marvel and Pixar studios, they saw some success this past quarter with Iron Man 2 and Toy Story 3. The stock is higher in the after hours, Pimm.
All right, I want to thank you very much. Courtney Donohoe reporting from the New York Stock Exchange.